Alright guys, welcome back. So I hope you all having a great weekend. So going into the weekend, let's talk about miners, which were doing pretty bad, well, at least last 2 days, considering IWM, Russell 2000 and entire small caps pretty much selling off pretty big and giving back all that rally, most of that rally that we had a couple weeks ago in the beginning of basically in the middle of the July. So Riot Platforms, very quickly I'm gonna go through the charts levels I'm watching, just like we do usually with these names, because I have been covering these names once in a while for quite some time. So for Riot Platforms, here's what I'm watching. So we spoke about this level many times, and that level is on my chart. I have an alert 791. If it does slip that level, I can see this name coming down to the 550 level. That's the next support. But so far, this area where it's trading 860, 857, that's where it closed. So basically from 8 to 850-ish level, this zone, little zone, may act as a support. But again, it can flush down. They reported earnings, negative earnings, EPS. And let's take a look at BTC before we go further. So BTC pulling back as well. So I guess it depends if we see Bitcoin over the weekend flush down, to see maybe those miners will be flushing down and opening already with a gap down on Monday. If it does happen, then next week, I mean, first a few days, it might just chop before heading lower. Another stock which I have to disclose, of course, Cleanspark. Well, every time I go through the chart of any stock, I just set an alert, and anytime that gets triggered, I may or may not take a certain trade. So in Cleanspark's case, I know they are reporting earnings next week. I took a put option. I bought small, like $1,000 play today, going into the next 2 weeks, saying that this stock can flush down to these 1050 levels where we have a little bit of a gap, or after reporting earnings it did have a gap, but again, it is at the moment at 200-day moving average. That's where it closed. That level is 1330. That may act as a support, but you can see what it has been doing for the past like two weeks. Actually, you can see like the price action. It has been basically more negative than positive every single day, most of the time, and momentum for that short period of time so far to the downside. Can we get some relief bounce off of these 200-day moving averages? Absolutely, we can, and it is not that oversold considering how many people are trapped in these levels. And below 200-day moving average, market makers join to selling, putting pressure. So I'll be watching the 200-day. If it does slip below that, I'll be holding and maybe waiting for this name to flush all the way to 1050 before selling out my position. But resistance from here now is the $15. So it did slip below that support, 14.50.15. So I'll be watching this name ultra short term. I'm slightly basically bearish on this name, and basically all of the miners. Marathon Digital, another name, slipped below its 200-day moving average. You can see same thing, but support maybe around 1450 for Marathon Digital from here. We know they reported earnings, negative EPS. I think they told it they're not gonna slightly. They have like Bitcoin mining increase, but they were saying that they're not gonna sell Bitcoin, but they don't have to. I mean, they can do share offering and keep basically keep the business up running. And also MicroStrategy and Coinbase reported earnings as well. MSTR, both were down. I mean, it's because of BTC. MicroStrategy has 10-to-1 stock split. It all depends what BTC is going to do at this point. So if BTC takes a flush to like 50 something, 52k, 55k, we might see more pressure on these names. So for MicroStrategy, I think it can come down to the 200-day moving average around like $1,100, maybe $1,150. Coinbase, I'm watching 200-day moving average right here as a support, which is at 190-ish. I thought maybe you could have done it today, but so far this $200 level acting as a support. So, and it is a support actually, 200 to 205. This was the range. But if it does flush to 188 to 190, that's the support, 200-day moving average support. But if it goes below, anytime you see a stock lose 200-day moving average, you're going to be very careful. So that's what I would be watching. So to the upside, I mean, resistance levels, I have talked about them in my previous videos. But I look at when volatility is that high, like today, VIX shot up all the way to 30, like 29 something. And that means there is a fear in the market. And last time we saw this get triggered, it was regional banks getting like out of business. Like a few banks went out of the business, and that was the time in 2023 March. Ever since, we haven't seen this type of basically fear. And technically what it is, it's basically people rushing in to buy puts in SPX. That's what it is basically. VIX measures, it's just option volatility index. I mean, I don't know if you can call it index. It's basically gauge. Some people say it's fear gauge, but it's technically put to call ratio, okay, from S&P 500. So since many people were just running off of semiconductors in S&P 500, well, as soon as semis went below 200-day moving average, and like you look at the Intel, what happened? No mercy for companies that are reporting softer earnings and maybe guiding lower and maybe doing even layovers. No mercy. They're going down pretty big. So and market is basically rushing into some to buy some puts. Is it good time to buy puts right now? Well, it's expensive. Another saying is that, well, when VIX is high, you buy. When VIX is low, you go. I mean, you do you. I'm not recommending anything here. I'm just basically sharing my opinion, okay? This is purely for entertainment purposes only. Thanks for watching. Don't forget to like and subscribe.